President Trump recently floated the idea of a 50-year mortgage, and I think this is one of the worst ideas I've ever heard. So I wanted to make a quick video to walk through the reasons why. I'm Brandon Avdikian, the founder of Aspire Commercial, a commercial real estate brokerage and property management firm based in Houston, Texas. Now, a 50-year mortgage might sound like a good idea because on the surface, you may think it'll make homes more affordable because the longer the loan term, the lower your monthly payment. And so in theory, the easier it is to access financing to buy a house. But even though it may sound good, in reality, it does the exact opposite. 50-year loans will do nothing but make homes more expensive and less affordable for everyone. And that's the unintended consequence. A lot of these big government policies is the people that you're trying to help by the policy actually get hurt because the people that needed the 50-year mortgage to qualify for the loan, once the price of the home goes way up because of the invention of the 50-year mortgage, they're going to be worse off than they were before. And this really just comes down to basic supply and demand economics. If you make it easier to buy something, more people can buy it. If you subsidize demand, more people can buy it. That is what you're doing with a 50-year loan. You're subsidizing demand. You are creating a mechanism for people to be able to buy something they otherwise couldn't buy without the 50-year loan. And so what happens when you do this? The prices go up. You have more buyers fighting for a finite amount of goods, which is housing. And so the prices are going to go up. If you want to fix housing prices, you need to add more supply. You need to have more houses available for people to buy because that will drive down the price. By creating more buyers for the same amount of houses, prices are going to go up. More buyers is more demand is higher prices. This is about as simple as it gets, yet it seems to be complicated. So we've got to break it down in this video. So when the government subsidizes demand, prices are always going to go up. Housing, healthcare, and college have always gone up much faster than the rate of inflation because these three industries are so heavily subsidized by the government. You can't get a 30-year loan to buy groceries or gas or clothes or shoes, but you can get a 30-year loan to buy a house. You can get government subsidized loans and government-backed loans to go to college. And then in healthcare, the government's involved just all over the place and in subsidies. And so housing, healthcare, and college go up. Just go look at what you were paying for healthcare 10 years ago versus what you're paying now. I remember my mom told me recently that it cost her $10 when she had me. Now it costs about $10,000 to have a kid. So it's just crazy, and it's because of government subsidies at the end of the day. Let's put some numbers to it to illustrate how insane this is. So the average home in the United States today costs 26x more than it did in 1963. The average price of goods in general have only gone up 10x since 1963. So 26x since 1963 for homes, 10x since 1963 for goods and services overall. Why is that? It's because long-term government-backed lending drove up the prices. 30-year loans is already an insane long period of time to finance a purchase. So part of why housing prices are so high already is because of the 30-year loan. And so we're just making it even worse with a 50-year loan. Now, there are parties that will benefit from 50-year loans. It's just not going to be the borrowers that needed the 50-year loan to buy the house. And so who is going to benefit? Well, first, lenders are going to benefit because the longer the loan term, the more interest in every payment and the less principal. And so borrowers are just going to be paying interest. They're never going to actually pay down their loans. And so banks are going to make a lot more money. Cities, counties, and school districts will love this because they get funded through property taxes. And property taxes are driven by property values. And so if property values go up, property tax revenue goes up for cities, counties, and school districts. So they come out with a 50-year loan, housing prices go up because of it. Cities, counties, and schools are going to have a lot more money. And guess what? They're going to waste the money just like they did after COVID. Did you see your city services get better after COVID? And when I say after COVID, COVID caused housing prices to go way up. So these cities, counties, and school districts got way more money. Your city services got worse. Your school districts got worse. They do not use the increase in revenue efficiently. They find ways to waste it. And so why do we want to give cities, counties, and school districts more money than they already have? The other main beneficiaries of a 50-year loan would be appraisers, title companies, inspectors. The more houses are bought and sold, the more those businesses make money, so they will love the 50-year loan. But again, the person that is trying to afford a house will not benefit. They will be much worse off because of this. Now let's look at how little principal you're actually paying off when you get a 50-year loan. I made a spreadsheet to calculate with a $500,000 mortgage at 6% interest, what are the payments, principal, and interest on a 30-year versus a 50-year? And I did this because I wanted to see what stood out. And here's what stood out. On a 30-year loan, when you make your first payment, 17% of what you pay is paying down your principal. 83% is going to interest. On a 50-year loan, only 5% of what you pay in the beginning of the loan is going to pay down your principal. 95% of what you pay is going towards interest. By year 7 of the loan on a 30-year mortgage, 25% of what you're paying is going to pay down principal, and 75% is going to pay interest. On a 50-year loan, 25% of your monthly payment isn't going towards principal until year 26. And so you've got to make your monthly payments for 26 years before you get to the point where 25 cents of every dollar you're paying to your lender is paying off your principal. That's terrible. That makes no sense. And then in a 30-year loan, 50% of your payment is going to pay down principal by year 18. So again, for every dollar you're paying your lender, half of that dollar is going to pay down the principal of the loan, half the dollar is going to interest. That happens in year 18 on a 30-year. In a 50-year, that doesn't happen until year 38. That is crazy. I'm 34 years old right now. So if I get a 50-year loan, by the time I'm 72, half the money I'm paying my bank is going to pay down the loan and half to interest. This is how you set yourself up to be in debt for the rest of your life and never actually build equity in your house, which is, for most people, it's the biggest asset they ever buy. And so if you get a 50-year loan, you don't even really own the house. You're essentially renting it from the bank because you're hardly paying down any principal when you're making payments. You're just paying all interest. So you might as well rent, because at least if you rent, your landlord is responsible for big repairs and upgrading the roof and fixing the foundation and all those big costs over time. And so in closing, a 30-year mortgage is already a very, very long time to finance a purchase. So the last thing we need to do is implement a 50-year. It's just nothing but a trap for people. And so no 50 years, 30 years is long enough. If they come out with a 50-year, run the other way as fast as you can, and we'll see you on the next one.